Good afternoon, everybody. This is Dan Hussey with ElliotWaveForcast.com, bringing you our end-of-day recap for the live trading room. A number of our markets really haven't changed since yesterday, so we'll make this pretty quick. Let's begin with the S&P 500. No new extension existed here for the S&P 500, so we are still looking for now same anchor new high of this prior extension. Halfway back long for the day is still in play, but there's basically, at this point, I'm more or less more concerned with the full halfway back at a 1864 if the S&P trades it. Stepping out to a 4-hour chart, we've held full halfway back for the year at 1812s. This was also equal legs down. And then inside this level, we broke the full short, pulled into a full halfway back long at the 1845s, also equal legs down. Now we've broken a short inside that level. Full halfway back into an 1863 would be perfectly natural. Could still hold the original extension, but again, we're looking for levels to be buyers at as the S&P is likely still heading higher. In the short term to fulfill much larger time frame targets that exist up at the 1950 area, and particularly at the 1930 from the halfway back that is drawn from. Here's the start of the year right here. From the year's low to the year's high. And this, of course, was down in a three-wave, flat. Down in 3, up in 3, down in 3. Just absolutely beautiful price action so far for the S&P. And bullish. Dollar yen. No change here, guys. Still caught between the double inflection zone of 102.70 and 102s. We had a great discussion today about how the NFP is probably going to be the fuel for the fire to break one of these levels and to take the market, kind of in the next direction, so to speak. I'm still looking for it to go higher into the 103s, but it's obviously waiting for something, and it is just waiting for the fuel for the fire that is NFP, very likely going into the end of the week. Keep in mind, any falling, any collapse in the dollar yen, 99.60s is the next big inflection zone. Otherwise, still looking higher to eventually what will take us up into a 108 swing. We have the potential to begin it from these levels. It's a rough start, but it certainly could go higher from here. However, in the medium term, we have two great inflection zones that are duking it out here in the short term. And we'll see what happens. Pretty much still in a hold and wait zone if you're not long and free or short and free off of one of those levels. Euro yen. Its 2 is building longs. Finally broke the full halfway back short off of our prior 143.40 highs. Pulled into an ambush long at the 141.30s. Inside this level, did the exact same thing, and inside that level it did the exact same thing. So just slowly building longs, and the market's building into these longs. Certainly could retest any one of these inflection zones, but looking higher into the 143 area. Keep in mind that the euro yen is also been sideways inside of this kind of range, and we're looking for this range that has now compressed down to about a 141.20 to a 142.40, so 120 pip range that the market is caught in. We're looking for all of these ranges to come to a close here into the end of the year, or excuse me, end of the week, end of the month. And May is gonna be trending in one way or the other, and the market will decide that here very shortly. Aussie yen. Equal legs down. Extension support, prior high support, has already gotten a reaction here at the 94.70s. The market does seem to be holding a full short or front run of that off this other high. That level's more of a watch. It's not a level I'd take because this isn't the full swing high. That is simply the prior high of the a B leg high, and not a level that we would look for. Look to actually participate on, so I need to put it as a watch, but it is clearly offering some kind of resistance. So again, the Aussie yen is now in an even tighter range than the other markets, now down to 60 pips here as it bounces between these two levels, and again looking for some kind of resolution, likely with NFP, the big news event, going into the end of the week. Pound yen, let the broken record spin here. It's in a much larger wedge. It's actually starting to try to break through its highs and its downward sloping trend line. It's built longs up into these levels. We've been talking about this for some time. I feel like the market needs to now either confirm or break the analysis of an A, B, C, D, E wave triangle now being complete, and beginning to either break out, higher, or as some people asked about today, could this be a B wave triangle? An A and then an A, B, C, D, E. Yeah, that could be the case. My only concern is, it's holding much larger longs. We looked at up above us around the 83 area is the full halfway back short on the pound yen. So it should be like a magnet up into this area, up into that resistance zone, and we just keep pressing highs. We're 200 pips off the prior high and almost 1,000 pips off the prior low here. So path of least resistance is up as this resistance zone is slowly giving way, and this market is in my opinion just about to burst. Pound US dollar, very similar, only the pound US dollar seems to be leading the way and actually making new highs. This is a good cause to look higher on the pound yen as well. We are breaking through or heading up into a new target zone of the 169.50s. From this area, we'll look for a new full swing, potentially a 200 pip pullback from that area. But this market is going into extensions, and let's take a look at what that means on the hourly time frame here. So inside the 4-hour chart, we had a series of traditionals entry to target highs, and those have now broken out of their targets, and the market is holding out a high of the prior traditional to new highs, extension long here at the 168.70, we'll call it, just to give it a nice round figure, support level on the 4-hour chart. So looking higher into the 169.50s, about 60 pips higher in the near term. And this extension has the ability to now carry the market higher in the leg up still from a 164.60. So the swing from that level is not complete yet, and as long as the smaller time frames continue to hold their levels and drive that swing, that leg higher, the market can head higher. Even though it's hitting targets from a larger time frame. And we'll actually probably assume and look for that to happen. Euro US dollar got a second reaction, and 3 legs down, not quite equal legs, but almost, from this 137.90 inflection zone, looking higher in the short term to 139.60, and ultimately even higher from there to the really big daily 141 targets. So still have some ways to go to the upside, and looking for the market to, we've been looking for those targets for quite some time, months now, and hopefully we're getting close to them coming to fruition. Aussie US dollar is a little tricky. It's held 61, basically the do or die level here at a 92.30. It's also trying to hold and get reactions off of little micro longs off this level from these lows. I have to respect that. Seeing as we're seeing an Aussie yen in a very similar structure on the same time frame, I'd have to say that I'm still long biased towards a 95.50. But the Aussie US dollar also has a very valid 90.60 support level. So maybe something that could trade into tomorrow. I wouldn't bet on and be a short from these levels. I think there was opportunities to be short off this high prior, and now you got to be looking for a level to buy the Aussie, maybe even a little bit lower. I'm more or less, I think it's better to be more flat the Aussie US dollar and trade other things at this time, but there is good risk reward here for longs, but below a 92, path of least resistance is down to a 90.60 inflection zone. Euro Aussie, great example of how markets break extensions. Extension short traded once, second time it failed, pulled into a long. That ambush long traded at the 98.40s. Inside this level, there was an ambush long, broke shorts, pulled into the long as well. So the euro's looking a lot more bullish relative to the AUD, the US dollar, and the yen than it did before. And this is part of that swing that we are talking about coming into April and May. where we were looking for that shift in Euro from Aussie being technical into Euro being technical, Aussie going into more corrective mode, and the EURAUD has been a great gauge for that. We're holding, you know, the equal legs down into this 147 level. Beautiful technical zone. Got a over 300 pip reaction. 200 pips was the first target for that level. So being very technical here, and path of least resistance looks up into the 151 to 152 area, where an inflection zone could exist at the 152.50s. Dollar CAD also seems to be stuck here between longs and shorts. It on a 4-hour time frame, it actually did also trade into a full short here off this prior high. So it gave you opportunities to get long at the 109.60s and down at the 109s again. This seems to be maybe going into more corrective mode. In other words, it doesn't have a very clear trend, but I'm still bullish the dollar CAD while above a 92.50. Although inflection zone shorts we're seeing get reactions, and we have to respect that a little bit. So dollar CAD could always open up and become a much larger pullback down into the 107, 106 area. But while we're above, a 108.75s, I have to, continue to watch and draw up longs, even though we're seeing shorts get somewhat of a small reaction. So that pretty much concludes for today, guys. We're going to be putting out a lot more videos regarding. I think there's a lot of interest into kind of using these technical setups and how to integrate them with the ElliotWave Forcast. We already have some videos up, so I urge you guys to check out. There's a new tech blog up, as well as check out the live trading room landing page on the members portion of the site to take a look at some of the educational videos I've posted there on what are extensions. And of course, how to draw equal legs and 50% lines and actually trade them, use them to execute trades. So that being said, have a great day, everybody. We'll be back with you tomorrow, and as price action develops, I'll be doing some special coverage for NFP, or when these markets finally do confirm, particularly the yen crosses do confirm a breakout of these very tight ranges we're going into. I'll be putting out some special reports and some special videos regarding specifically the trade plan for those types of those markets. So that being said, have a great day, and we'll be back with you tomorrow and as price action develops.